Hey guys, what's up? This is Andrew for TRENDLINES.com. So let's have a look at everything that has happened this week. AMC GME, quite a negative move to close the week on GME. Unfortunately, we're going to analyze that. And of course, we're going to have a look at what is happening on the rest of the market. Triple Q, guys. I'm going to show you some things on Tesla as well. And I want to discuss the medium, long-term scenarios to know if the bull market can start again soon. If yes, what should we be looking at to know if this is happening or not? And try to give you my view on what could happen, during the summer and in September. So let's get into it. All right, guys. So AMC first. So as you can see, I kept my two scenarios here. So let's analyze the facts and then let's try to build up a view based on that. So only looking at AMC first, we're gonna go through first the price action. So you can see a trend line is here. It has been slightly moved, guys, but here we have almost perfect reaction. So this trend line is very valid to me. Just connect the lows here. I don't really like to see a consolidation close to the trend line. As you can see, this is a consolidation. The price action is stuck here, which means that bears are putting pressure on this trend line. All right, so it's not good. It shows that bears are very active, but for now, bulls in control. If we just look at the price action, we're still above the major support that is here created by this trend line. Then second indicator we're going to have a look at is the RSI. What you guys can tell me by looking at this RSI? Okay, it's stuck below 50, right? The 50 mark on the daily time frame is very good to use to know who is in control. Very simple rule: when we are above 50, bulls in control. When we are below 50, bears in control. So here you can see we have an information that is a bit contradictory compared to the price action, because we have a momentum RSI, which is a momentum indicator that is telling us bears in control, but the price action is holding well above support. So you can already see we have mixed signals. Then we can have a look at MACD going higher. So this is rather bullish as well. MACD positive. Okay, this is not really meaningful. I don't use that a lot. Bam, bam, bam. What else do we have? Volume. So it's interesting to see that we had an increase in volume on Friday, but we did a very small move. Let's analyze that a little bit more. Let's see if the volume happened on red or green candles. A little bit of both on the hourly, on the 4 hours time frame. If I go on the hourly time frame, all right, the biggest volume occurred at the close on the green candle, so that's rather positive. And the open was red and also increase in volume. So it's rather positive, because the biggest volume occurred on a green candle, but it's not a very strong signal. This candle didn't go through any major level, right? We are still stuck. If I come back on the daily time frame, we're still stuck in this range between, I would say, 11.5 right now and 13.3. You see, we're still stuck in this range. So if we had a move here of this candle that is taking back some important level with this volume increase, this would be called a breakout. And you guys know that breakouts are very good to use for trading. On AMC, it's a bit more tricky, let's be honest, but it's still good signal. So here, once again, this is some information that is not very usable to me in terms of building up a view. So to conclude, we have more bullish signals, which are volume and price action holding above support, than bearish signals that are RSI stuck below 50 and this consolidation forming just above the trend line. So rather bullish. So we are rather in this bullish case that I drew 2 weeks ago or 10 days ago here. So for now, this is what is happening. So let's see if we're able to go to this area. Once again, to answer that question, we need to look at the rest of the market, because right now the correlation between AMC or GME, GME is not true for yesterday, but most of the times when we are in a difficult market, moves up occur together on every stock. So AMC, GME, Tesla, all of those move with the rest of the market. And when everything is tanking, there is no exception for meme stocks as well. When we are in a bull market, that's not true. We've seen that last year when we had some strong moves down on the global market, SPY, QQQ, and we have seen AMC GME squeezing. All right, but the situation is totally different. So let's forget about this negative beta for now and try to use what we have on QQQ. I'm going to come to that very soon, guys. This is very interesting, so you need to see that as well. Don't only look at GME and AMC, but first let me do GME. So it's interesting to see once again that, look, we've done the analysis on the RSI for AMC, and you remember, guys, that we were having an RSI that was below 50. On GME, guys, you can see that bulls are much stronger as we have the RSI here that is on the total opposite of AMC, holding just above the 50 mark, all right, which is clearly seen in this nice move up that we had since early May. The question we have is this move finished or not? I have labeled this 1, 2, 3, 4, 5 here. There is another way to label it, is like that. Okay, so I was thinking of it. So this would be a third, a little bit extended. This is possible as well. For now, we didn't make a new high, but it's not excluded that if the rest of the market pushes higher, GME goes to 160 next week, then probably get rejected. Here, as you can see, we can make some kind of triangle. All right, we have here a horizontal resistance that is around 150. So if we go above that, we'll probably push to 160 quickly. So this is for some very short-term trading. You can see that the support areas here are not coming from a trend line. Maybe we can do a trend line as well. All right, it's not a beautiful trend line, but it's not too bad. No, I don't like it. It's better to use the 20-day moving average. You can see the price action is supported by it 1, 2, 3, 4 times. Yesterday the reaction was perfect. So this is our support created by this 20-day moving average. All right. Let's be honest, this is hard to trade. We are very close to this resistance here. The nice thing to do is to wait for this major breakout and to buy some call options or something like this, you know, to play really the move that could happen right after that, call options, because once again, we've seen in the past that there were some fake outs here. So if you buy call options, you just lose your premium. You're not stuck in a position that can lose, you know, on the downside, and you don't know how much. So let's wait for now here. I don't think it's the right time to buy. I would even here reduce the position. I know you guys don't like to sell. I'm just giving you some technical analysis things that you can do based on the different scenarios that I'm giving you. So here 160 is to me a resistance, and the 130 level roughly created by the 20-day moving average is the support. Once again, it's hard to know what will really happen here. If the rest of the market gets really bullish, I mean, all right, pretty nice scenario that could happen. On the other hand, if we get one more leg down on the global market, which I'm afraid we will, all right, something like that, okay? And here would be a very nice level to buy on this trend line around the 100 level roughly, all right, maybe in, I don't know, 1 month, something like that. So I think that this is what is awaiting us. I don't see for now a breakout of this triangle and a strong move up unless the rest of the market is really bullish, and let's have a look at that. So I'm going to give you my view on the global market. Let's quickly just remember what is the situation. The situation is that we are correcting for the past 6 months, all right? The correction has started here. The reason of the correction was the increase of interest rates, the tapering, and there was no war at that time. And we were like, all right, this is going to be, I was the first to tell you guys, be careful, we have a breakout. We're probably going to go to 280 on QQQ around June. This is what I've told you guys here in December. So I was quite right about that. And the different, but what happened, and I didn't know that at that time is the war, and the war created inflation in a way that we can't control it anymore. So this is a new data that we didn't have back in deck, and that is making the correction, I mean, likely to last longer than expected. So based on that, I'm afraid that we are going to move in 5 waves down. So 1, all right, in red, 2, 3. I'm not sure the third is complete or not. It looks complete. Okay. It looks complete because if we try to break down this third wave into 5, okay, I would do something like that. Okay. So it looks like we have 5 waves in this third wave. It's not very clear, let's be honest, but let's analyze. So first, let me conclude on that. So it looks to me, so maybe this is an ABC, okay? A 5 3 5, it's possible, and then we go higher. All right, this is one scenario, and this is what I thought at the beginning. I thought we were in a big ABC correction. Okay, and what is happening on the crypto market with this, you know, Luna thing, Celsius, the war that is going to last longer, the Fed that is, you know, willing to really increase rates at a higher pace than they initially wanted to do. So creates to me new information that needs to be taken into account in the market, and that is going to be hard, I think, in this environment, this macroeconomic environment, for bulls to really take back control in the long run. So I'm rather thinking that we're going to have a deeper correction. So based on that view, which is coming from macroeconomics, I might be wrong on that totally. You know, we've seen the market surprising us very positively just after COVID, when everybody was saying that we're going to drop further. And that, you know, here during this move up, everybody was saying, oh no, this is not going to hold. The economic data is too bad. All right, but we printed so much money that the economic data became very good and very quickly. So we had this massive rally. So we always need to be careful when we analyze macroeconomics, because it's very hard to really predict how you know, the economy will adapt to the new environment. But here, I mean, you know, we can't print, we don't have any more, really, the Fed cannot really take any action to sustain the economy. And I mean, maybe we're going to have some growth even in this inflationary environment, which would be a good way to prove that the market is strong and resilient, and that maybe we can have another leg up. Possible, all right, very possible. But for now, this is not the preferred scenario I have. So I think that we're on a 4th wave, all right? So as you can see, the 2nd wave lasted roughly 2 to 3 weeks. For now, if this is the 3rd wave, it's been only 1 week. So we potentially might have, you know, something like this, an ABC, and then go lower, all right? So this is one scenario. Another scenario is that we get rejected right away, and that we have a short 4th wave, and then we go lower, all right? This is another scenario, and then we would need to see if this 3rd wave was complete here, or maybe it's going to be complete a little bit lower. It's possible as well. So what I'm trying to say is that it's very hard from here to know if this move up that we have is the beginning of a new move up, but we're going to analyze that. To me, this is not the case. Or is it a correction of a subwave, or is it a 4th wave? Okay, so it's very hard to know that. But one thing we can say for sure is, so let's analyze the price action that happened here. As you can see, we have a nice inverted head and shoulder that I drew in yellow here. Okay. And we have here a breakout. Okay, so this pattern is a famous pattern I had some questions from a member in the platinum area when it was happening, but we didn't have any volume. So you know, you can trade this pattern whenever you have volume here. But on the short term, on the 4 hours time frame, we didn't have any volume during this breakout. All right, you can see, guys, the volume is totally dry. So it was not a good play to me. It would have worked, but it was not a good play. All right, what can I say? So now we have this. So usually you guys know that we're gonna move roughly. So here we're at 270 from the bottom to the head of the head to the basis. There is 15 points, and the basis is at 285. So this should bring us roughly to 300. This would be a validated head and shoulder, inverted head and shoulder breakout with the target of roughly 300. All right, first information. But as you can see, the volume is very weak. So this is making this move weak, and everything that is weak in a bear trend like that, in the downtrend, is usually attacked by bears. So let's see if bears attack this on Monday. I think we still have a little bit more room. As you can see, we have the target at 300, and we have here a trend line that I drew by connecting here the highs and here 1, 2, 3 connections. And this gives us a level of roughly 297. All right, so 297, 300 is an area where we have the target of the inverted head and shoulder, and we have some resistance coming from the trend line. All right. So I believe that this level is going to be important. Either we get rejected or we break out. If we break out, we'll probably retest and then maybe push to 315 before either dropping more or going higher. All right. But I'm going to analyze that here, and to know if once we arrive at 315, we are likely to go higher or to dive more, we're going to need to analyze what is happening here. All right. Do we have volume on the way up? First thing. Second thing, and this is the reason why price action analysis is not enough in this case, we would need to know, is this market ready to be bullish again? So we're going to need to analyze the macroeconomics, the situation, inflation, COVID, war, these things, and we can look at the different indicators that we have. So we're going to have a look at the VIX. You guys know that a VIX above 20 is bearish. So of course, this is very bearish for now. We have a VIX at 27. If we arrive at 315 here, maybe in 1 month or 2 to 3 weeks, we're going to have a lot of information to analyze. Like I said, the volume, but as well, how long are we able to stay here? And are we able to stop moving around this level? Because if we always go up and down strongly, this is bearish, guys. And to know if the market is quiet or not, you can look at the VIX. So once again, we need, for bull market to start again, we need both the price action analysis to tell us that bull's in control, volume, support, resistances, momentum, this kind of things. Plus, we need to see that the volatility is dropping, which is the indicator of fear. And we can also have a look at the reason of this bearish moves, which once again are coming from the inflation, which can be measured by the US 10-year yield. So as long as we have a US 10-year that is above 280, 285, guys, there is no reason this stops, all right? This will probably keep correcting because this is what is creating this bearish moves. So once again, how to play that? It's not easy, guys. It's not easy. I personally took some protection. I am now having a slightly bearish position overall. I used SQQQ. All right, and here, as you can see, so I started to buy a bit higher, started to buy at 53.5, all right, also here, okay, on Friday, and I use a stop loss here. So you're going to tell me, yeah, but you use a stop loss here, but we can very well be bearish again afterwards. Yes, true, but you need to put your stop loss somewhere, right? Otherwise, you cannot make big positions. So I want to play this. If this is not working, if we don't have a bounce here, then I don't know, I will find something else later. But for now, I'm playing that, which means that basically if we go above 300 on QQQ, I'm going to exit my short position, which might be a mistake, because if we go above that level without volume, we might very well dive more. But once again, this is trading, and I stick to this method that is making me use stop losses, even if there is not a clear signal to get out of the trade. But once again, if you have a method that uses stop losses, you just need to stick to that. So this is what I'm personally going to do. Once again, I'm going to sell roughly here. I mean, I sold already, and I'm just going to use a stop loss right above this trend line, which is on SQQQ, right below this move. And then I'm going to see either we drop more on QQQ and at least I'm protected, or we come back here. So I'm going to stop my position at the beginning, and then I'm going to probably try to reload around 315. Here I'm going to build up another short position with a stop loss maybe just above. And if I see that we have strong volume here, and you know that everything is cooling down and that the macroeconomics are doing better, I'm going to start to slowly reduce my short position. So there is no magic formula, of course, guys. This is really tough to trade. This market is full of tricks. The reason being that there is no direction. No one really knows what's going to happen. I mean, you can't say whatever you want. The truth is that every day is new information. Every day is bringing us, is telling us what is the sentiment on this market. For now, the sentiment is clearly bearish, guys. We have some strong moves up on very low volume. This is not bullish. We have a lot of uncertainty. We still have VIX very high, US 10 yield above 3, DXY above 103. All right, so all of that is telling me that we are not out of trouble. And once again, if you ask me when are we going to be out of trouble and how would you know that? So first, I don't know anything for sure. But second, I would tell you guys that we need time. All right, it's not a question of levels. If we strongly go to 340 in a matter of 1 week, this would not be bullish, guys. This would be crazy and probably bearish to go higher that fast, especially if we're on low volumes. It's not a question of level. We need to go above 315 quietly with a VIX that is dropping. Good news coming from the news flow, macroeconomics. The US 10-year yield that is dropping, you know, telling us that inflation is under control, and all of that, guys. It's a process that cannot be only read on charts, and charts here definitely help. But we're in a situation where we need to aggregate all the information we have and try to build up a view based on that and make some trades based on technicals and macroeconomics. So it's really, I mean, it's trading, right? It's very exciting, but it's really tough. It's not easy to make money. So I personally don't go big with my positions because I know this is very tricky. And I think that the best thing would be that we have a real drop, that we purge and we come back to the 230, 200 area on QQQ, and here you just reload massively. I mean, what can happen once we're here? So this is the easy trade. I'm not sure it's going to happen. This is what I'm personally playing. I think that unfortunately we're going to see this low levels sooner or later before, of course, bouncing from there. So that's it for today. I hope you, Tesla, same thing. You can see we are playing around, the 700 level here. That was a strong support. We went below, above, below. Now we have a breakout with this trend line on low volume. I mean, it's very hard to play. I don't know what to think. I think that we're going to drop to 500 at some point. I don't know when. And of course, I can change my view if I see that we manage to break out above the 1100 level. So here I have a level because I have a nice trend line. We are so far from that, guys. So for now, I personally don't have any Tesla shares, and I will only start to accumulate at lower levels. And if I miss that move, and if we're in a strong bull market, I will find a way to enter, on a dip once the bull market is confirmed. All right, it's so much easier to trade during a bull market than right now. I prefer just to be patient. So that's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. See you guys.